Welcome to Surgeon Syndicate. If you're paying attention, you know that you only make money when you work. It might be great money, but it's dependent on you. The information on this podcast will help you solve that. We interview experts and provide analysis into financial freedom through commercial real estate. Why? To help physicians like you thrive. Let's dive in.
Welcome back to Surgeon Syndicate. This is your host, Dr. Michael McManus. Thank you for joining us today. We're back with Ray Hightower. Let's jump back into the conversation where Ray is giving us a little more detail on how you really dig into evaluating a deal with boots on the ground.
Who are the people who typically will give you the lowdown that maybe didn't come to you in the marketing material, where you find out you really help you look under the hood and see what's really going on?
On-site maintenance people.
Ah.
If you ever have a chance to walk around and say, "Hey, wow, Jack, you're doing a really great job here. I love what you did, with that, with the repair on that landing right there, those stairs over there. How often do you have to do that kind of repair?" Or, "Hey, I understand that there was an issue with the roof on building C, and you were the person who came there and fixed it. Man, you are like Johnny on the spot. How often do you have to deal with something like that?" Or, what's going on with plumbing? Or what is a repair that you consistently need to make on this property? Or, and then you just talk to them. And when I'm talking to someone like that on site, I try to do it without having any notebooks or anything in my hand, because I don't want them to think, "Oh, I'm taking you said unit C51 under the kitchen cabinet." Yeah. We're just having a conversation, right? So on-site maintenance people, because you know what? Here's the thing. They're smart enough to know that these buildings trade hands all the time. And they know that when they're talking to someone like my partners or me, they're interviewing for their next job. They're aware. And so we're evaluating their attention to detail and interaction, all that kind of stuff, right? So on-site maintenance people, people in the office, whenever I'm in an office, I always ask about occupancy. Even if, I don't know, if I was at a property where I wasn't actually on a property tour, and for some reason I was in the leasing office, I would always ask about, I'm just curious about occupancy rates, because that drives everything. If you have high occupancy, you have plenty of revenue, and most problems in these properties can be solved if we have sufficient money. But if we don't have sufficient money, that problem becomes much bigger. And that having money or not having money, that's all driven by that occupancy level.
A lot of doctors, we have a discussion about commercial real estate, and because they've had experience with, and I'd say my personal experience with most residential real estate agents has not been excellent. As far as, it feels like a used car salesman. They're trying to get a house sold, and they like to sweep stuff under the rug.
Yep.
What's your experience with commercial brokers from that aspect, as far as, are they wanting to get it everything out in the open and let's hash this out and get it done? Or is it more just trying to get something sold?
Yeah, it depends on the broker. I spent some time as a broker in Chicago, as I told you, so I've been on the inside of that. And then now I'm on the outside as an investor going to brokers. We've been very fortunate in the brokers that we've been able to deal with here in Arizona. We talk to a lot of them. And there's a bell curve, just as there is with any other profession. There are some who are really good. Most are somewhere in the middle of that fat part of the bell curve. And there are a few who maybe should consider a different profession, right? So there's, that's with any profession. And our experience has been, first of all, that broker is hired by the seller to represent the seller. So they're always going to present things from the seller's viewpoint and from the seller's standpoint, right? That's what they are. They have signed an agreement with that seller where they have a fiduciary responsibility to represent that seller. And fiduciary, the whole idea is, care, obedience, loyalty, exclusivity, and notice. Those are those big things that fiduciaries need to adhere to. So we recognize that. At the same time, once you get further into the deal, you're under contract, the best brokers, while they're still representing the seller, they shift from representing just the seller to representing the deal. They're focusing on getting that deal across the finish line for multiple reasons. One, the seller doesn't want to go under contract and then fall out of contract and not get the deal done. Excuse me, I have to cough for 1 second. Sorry about that. I had to cough briefly. So I hope your editor can take care of that.
Yeah, that's all right. We got it.
Okay, you got it. Thank you. So they move from representing the seller to representing the deal, because the seller, they don't want to go under contract and have to go out of contract, because that is wasting the seller's time. So they want a broker who is able to make that shift from just representing the seller while they're bringing in a whole lot of offers from buyers far and wide and all of that. And once you have a buyer that you're under contract with, they need to know that that broker is writing that deal, interacting with the lawyers and the lenders and the other professionals involved with the property, people who are conducting inspections, the new property management company, the old property management company, because they're not always the same, right? Sometimes you're switching property management company in the middle of, doing that deal. So a good broker will do all of that. And there's some brokers who do it, some who don't. Some firms have brokers where if they've got a new broker coming on board, they'll make sure that they are mentored by someone who has more experience, who's been in the business for a while, right? And, in Arizona, there's more than one, father, son, or father, daughter, or parent, child brokerage teams here who do really well. So we've been fortunate here in Arizona. We ran into something with a broker in another state. I'm not going to name what state it is, but because it's a small world, but we've run into that. We've had some brokers where if we decide, no, we're not going to make an offer on it, and they start taking it personally. What do you mean you're not going to make an offer on it? I spent all that time showing you the property and all that stuff. And, if you're going to yell at your buyers, that's probably not a good way to build a relationship, right?
Yeah.
So there's a bell curve, but all in all, I will say we've been very fortunate with the brokers we've dealt with, particularly in Arizona. They've been good people.
So let's just shift a little bit to the perspective of the investor. So the passive investor. So if somebody's out there and they've never invested in a syndication before, what would you say are the top few things that they should do to get ready for their first one, and how they should go about, setting up to become a passive investor?
Mm-hmm. Yeah. Number one, I would talk to more than one syndicator. I would talk to a few syndicators and ask them, what is the structure of your deals? Tell me some stories about some deals you've been through. Tell me some things that went wrong, and how did you deal with things when they went wrong? How many partners do you have? I'd get very curious about what they're doing. I would also pick up a book or two about underwriting and dig into what underwriting is and what's involved with that. And there's a definition that I like to give passive investors about underwriting. I tell them, underwriting is, it's taking this piece of real estate and turning it into a business that makes money. And you're doing that inside of an electronic spreadsheet, so you can pull a lever here and see what result is over there, and pull another lever over there and see how it impacts returns. And I would encourage them to look at it. They don't have to be masters at underwriting. Not many people are masters at underwriting, but they should at least understand it well enough to know when to go to someone else and get advice. Like if someone is driving a car, they may not know how to do an oil change or a tune-up or a transmission service or a complete engine overhaul or anything like that. But they should at least know that when someone's doing an engine overhaul, they're under the hood and not at the final drive differential in the back of the car, right? That kind of thing. That's the level of knowledge that they should have. And so And I would encourage them to get out and network and meet some syndicators and talk to some other investors who've invested with syndicators. There are some syndicators that I know of who have been very successful in the business for years, but recently are in trouble. Like this year in trouble for whatever reason. It could be a bridge loan that, the interest rate went up and, their rate cap expired. Oh, well, all of a sudden that 1.3 or 1.4 debt service coverage ratio you had, now it's a 0.8 debt service coverage ratio, which is not a place you want to be, right? So I would encourage them to read something about underwriting. There's a few books I could recommend too if they want to get into that, but I would take a look at that and meet people. Yeah.
Since you used the term, and this is one that throws a lot of people, so debt service cover ratio.
Yes.
Give us a quick definition and a number somebody should put in their head, and whether it should be above or below that number.
Oh yeah, absolutely. Your debt service coverage ratio is your net operating income, and I probably need to define net operating income too, right? So every time we use one of these, but it's the amount of money you made divided by the amount of money you pay every month to your mortgage company. And the reason that's critical is the mortgage company needs to know that whatever they're expecting from you, they expect you to have at least 1.25 times that or greater coming in. That's a typical ratio, 1.25 or greater. We like to see even better than that if we can. But the challenge is if you are underwriting your deal such that you have a much higher debt service coverage ratio, then the price at which you're willing to acquire the property is going to go lower, and somebody who's willing to pay more for that property ends up winning that property and you don't. So it's a very much a balancing act all in that. But 1.25 is a good number there. That's what the agency lenders, the Freddie and the Fannie want to see, at least. Yeah.
And so if somebody finds a deal and it's got a very high debt coverage service ratio or DCSR, as a passive investor, that's a good thing, because that means there's a lot of extra money there before that deal is going to get in trouble.
Absolutely. And at the same time, I would encourage them to look at how those numbers are calculated, because it's your net operating income. There's some people who put everything in that. All of your expenses are included in that, your taxes and your insurance and all of that. Some people don't include property management as an expense there because, I manage it myself. Well, your time is worth something. And if you decide not to manage it, you need to take into account what you would pay a professional management company, because it's going to come out of the property too. So yeah, that's one of the reasons I would encourage anyone to get into this, to read something about underwriting or watch some videos about it or take one of the Udemy courses or something like that to study something about it.
To learn something about it.
Yes.
What would be things that, so you get on your first call to talk to a syndicator,
Mm-hmm.
what would you say are your three most important questions to ask them?
Yes. Tell me about deals that you have under management right now. Tell me about your latest deal. Tell me about your latest acquisition. How much was it? Where is it located? And what I'm looking at, the reason I'm asking those questions is, how closely related is this deal? I assume that there's selling a deal to me or asking me to invest in a deal. How closely related is this new deal? How closely is it related to something they've done before? Because like with anything, and any human, as a human does something over and over again, we get better at it. And you want to be the kind of investor who's taking advantage of the hard knocks that they went through, a year ago or 10 years ago, not be part of the hard knocks today. Yeah, I would do that. I would also ask them, tell me about a deal that went bad. How did it go bad? What would you have done differently to prevent it from going bad? How did you recover? How did you communicate with your investors while it was going bad? Those are the kinds of things I would ask.
What are the biggest?
That's more than three,
flags?
isn't it? You asked me for 3 things. I kept talking.
Yeah, I was just trying to lay it out there. It was good stuff. What would be some red flags that if you heard in such a conversation, you'd be like, run away as fast as you can?
If they are brand new to the syndication business and they don't have anyone on the team that is not brand new. There's nothing wrong with working with someone who's brand new. That's good. We have to learn at some point. But what you need to know is that if they are driving the ship, are there other people on the ship who have experience driving ships? Right.
Yeah.
That's probably the biggest thing. I'd also want to know something about the age of the property and the level of renovations that are required. Are we talking about a complete gut rehab on a property that was built in the 1930s? Or is this something built in 2015 that needs basically paint and some landscaping?
Okay. Um, Anything else you want to add we haven't talked about? Either about, I guess we've been through a lot of stuff about looking at deals. Do you have any active deals right now that you'd like people to know about?
Yeah, we have a couple of deals that we're finishing up raises on a couple of them. Both of them are 506B deals, meaning that we can only bring in investors if we have an existing relationship on those. But they're both really good deals. In both cases, we raised enough money to close, and we closed to lock in a lower interest rate. And we're doing a little bit of raise at the end to cover our CapEx and that type of thing. If you're someone listening to this podcast and we already have an existing relationship, reach out to me and we will get you some info on those deals and let's see if there's a good fit. But yeah, we're always raising, we're always sifting, we're always looking for deals.
And that's a great one since we just came across. We've talked about this a little bit before, but the 506C means that you can publicly advertise the deal, which comes out and says it's this exact deal. It's at 123 Main Street. Here's all the stuff, and you can put all that stuff out there in the world on the deal. But typically in a 506C, everybody has to be an accredited investor. And you can also you go to your web portal and just throw money at it. You don't have to do anything else. But a 506B, you have to have this pre-existing relationship. And it can, there's a lot of gray zone here, but it also means you can bring in some non-accredited investors, but it's a reason for somebody, if they're looking at doing some passive investing, when you have these conversations, and if on a regular basis you're talking with syndicators, those are kind of the things that are those pre-existing relationship that then when those good deals come along, you have access to them. So
Yes.
if you hear about it, you're talking to your buddy and they're like, oh, I'm investing in this apartment building and man, there's just a little bit of space left and you should get in on it. And they're like, yeah, I'd love to get in on it. And they call you right at the last minute. They probably can't get in on it because you don't have enough of a relationship. And that relationship is built to protect the investor. But it's a reason just talk to people if you're new. Not only are you going to learn something from that, but it gives you a chance that if you meet somebody you like, that you're in a situation, you can get into some of these 506B deals that otherwise you might miss.
Well said. Yep. Well said. It's about the relationships, very much about the relationships.
And the more times you talk to somebody, you give them a chance to either prove themselves or to burn themselves and leave you where you're like, I really like this guy, or no, I don't like this guy at all. I don't want to be on another call with them. So you get a chance to work through that. And as somebody who raises capital for deals, typically you like talking to people. And when you get on that call, what is your goal? Is your goal to get them closed, or is your goal to get to know them and find out kind of what they need and what they're trying to do?
I would imagine my goal is very similar to yours. It's more important to get to know them and know that there's a good fit. For this reason, when they invest with us, that's a 5-year relationship or a 3-year relationship or a 7-year relationship, depending on when we decide to exit the deal. And I need to know that what I'm doing for them is really going to be good for them, and that it's going to be a good working relationship. Even though they're a limited partner and they might never talk to me directly, they might only read my monthly newsletters or something like that and just keep sending me money. We have, some people are like that. Some investors prefer to operate that way. I need to know that. Also, I need to know that when they invest with me, they're not investing their last dollar. Because, just keeping it real, every investment, you never know. The reason it's called an investment and the reason we talk about risk is it could go any one of a different, any way, right? It could go any way. We are very good at making sure that they all go in a positive direction. We're very good at that. But even if a deal ends up in a positive direction, there may be a period of time when you're hitting stormy waters. And how are they going to handle it while we're going through stormy waters? An example is we had the recent example with the situation from March of 2020 until, later in 2021, right? That situation was interesting. Nobody knew what was going to happen in that, or something may happen locally. There may be a fire. Anything could happen. One of my assets in Tennessee had a fire where we lost one of the buildings, a large 146 unit asset, and one of the buildings we lost. Fortunately, no humans were injured. No humans were seriously injured. We had one sprained ankle, and everybody survived. And we're building that building back now, and it's better. We've done all of that, and I need to know that if someone's going to be part of a deal with us, are they able to handle the ups and downs, the vicissitudes that are going to happen? If you ever talk to a syndicator that says everything's going to be like this, it's all going to be up and to the right forever because I'm just that good, anybody who tells you that, I wouldn't deal with them. There are going to be ups and downs. What you really want to understand as a limited partner investor is how will they deal with the ups and downs. That's the critical thing.
And for docs out there listening, for a syndicator, if you think about your problem patients, that when you see their name on your schedule and you're like, oh no, I have to see them today.
Yeah.
Syndicators feel the same way about problem investors when they're like, where did this person ever get my name? And I wish I would have never let them into a deal, because it's not a good fit and they're difficult. And so this is why it's good to have those conversations, is finding out that these are people you want to have a relationship with, because it's a relationship.
Absolutely. And, I can tell just from interacting with you that you are very much relationship driven. So that's important. That's so important.
Yeah, it's a great thing. So, well, Ray, thank you so much for being here. This has been great. Before we get off, where's the best place for people to reach out to you if they want to talk to you more?
Sure. ROI Clear. That's our firm. If you go to roiclear.com, you'll find info about what we're doing as far as our investments. And then I have a personal blog at rayhightower.com where I go through technology and business and all sorts of things that business leaders and entrepreneurs need to know in order to be more effective. So I look forward to hearing from you.
All right. And that should all be in the show notes. So for everybody listening, this has been great for me. I think I learned a lot here. I hope it's been valuable for everybody else. Ray, thank you for being here. And join us next time on Surgeon Syndicate.
Mike, thank you so much for having me. It has been a pleasure.
You're welcome.
Do you care about paying too much in taxes? And would you like to save more of your hard-earned dollars? Here's what we found. We found that most financial professionals have a one-size-fits-all solution. So the question is, would it make it easier for you to have someone tailor your tax solutions to your individual needs so you can keep more of your money and do what you want with it? That is exactly what we do at Excelstra.
As surgeons, we know the difference between routine surgery versus life-threatening interventions. And I want you to know that I've used Unicia and her team for my personal financial intervention, and I love the results. I would do you a disservice if I didn't recommend them to you.
We'd love to help you, so let's jump on a call and see how we can collaborate. Simply go to www.excelstra.com/McManus and book your free call today.
This has been an episode of Surgeon Syndicate. If you got value from this episode, you know other surgeons are hungry to become job optional, and you can help them by sharing this content today. Schedule a call and we can make a plan. Looking forward to having you with me on the next episode.